Did you know you can get a copy of the Edge Finder completely free with our sponsor, 8cap? 8cap is a super well-known brokerage that has been in the game of CFDs for a long time. And if you are interested in switching your brokerage to 8cap, they can actually purchase a copy of Edge Finder on your behalf, making it completely free for you. This is an offer our team has worked out to make the Edge Finder a completely free to access tool if you move over your account to 8cap. Here's how this works. It's pretty straightforward. If you head over to our website, a1trading.com/8cap, you can explore this offer in more details, including all the terms and conditions. But basically, the high level idea is if you create an account through that specific page and you meet the deposit requirements, 8cap will effectively buy a copy of Edge Finder for you. Now, please note this is unavailable to US traders, but for my friends outside the United States who trade CFDs and you like the brokerage 8cap after exploring it on this page that is linked below, then maybe you consider taking advantage of this offer. We've had a lot of people do this and it makes the Edge Finder completely free, which is a hard price to beat, by the way. It doesn't get much better than free. And it's a win-win-win. 8cap gets a new client, you get a great brokerage, as well as access to our software, as well as other stuff on that page. You can get access to free memberships with us, Stockbox, etc. at no cost to you. You just move over your trading to 8cap. So the full details and terms and conditions can be found on this landing page, again, linked in the live stream chat or in the description down below. Please also make sure to do your due diligence to make sure that 8cap is a good fit for your trading and meets all your criteria for what you're looking for in a brokerage. On this landing page, you can explore the different product offerings that you get access to from our store completely free if you deposit certain tiers within this list. And the cool thing about this multifaceted offer is that even if you have a lower capital basis, why not move your account over if you like the brokerage, you like what you see there, and get something for free out of it. I think this is a really cool offer that they've set up with us, and it is sort of a co-branded offer by 8cap sponsoring A1 Trading. So check them out. Again, all the information can be found on that landing page, a1trading.com/8cap, or found in the description or live stream chat below. Thanks to 8cap for sponsoring. Now back to the stream.
Good morning, everybody. Happy Friday. Hope you're all doing well. We are back for another one. We've got kind of a weird day. You have markets closed, U.S. stock market and futures market closed, although you still have a little bit of a shortened session here as things get started. We also have currencies, of course, still moving, crypto still moving, and we are watching the dollar continue to be strong. Dollar had a massive week with the Fed meeting and stronger economic readings than expected. We continue to see this one be a big winner for the dollar bulls. We'll see how long it lasts. I think for the dollar, I've pointed out that we've kind of hit our goal of seeing this move up to 100. It's been a really strong move overall, but the question is now, are we going to get the bigger one, right? The bigger question for the dollar has always been, all right, we've been back and forth on the range. We've been playing in this range for a while. But are we going to get the real move, which I would argue would be a breakout more meaningfully outside of this kind of funk that we've been in for the last few years on the dollar to push back up into the mid 100s? So we'll see. But I tend to think that the dollar looks pretty attractive on a longer term and shorter term basis. If I take a look at the US dollar from our score metric, what we can see is inflation being on the rise, economic growth being strong, and jobs market data makes this a very easy long for me. Of course, when I say easy, I'm not referencing that it is going to be easy money, because nothing is in trading. But taking an educated guess, I personally think the dollar has more upside. We've continued to stay with the trade for a while. It has been working. And I do think that where the dollar can go is easily, for me, it's easy to see that it could get to like 102 and then perhaps beyond from there. What changes my mind on that? Well, a couple things could change my mind. If this data starts to change, if economic growth starts to weaken, if inflation starts to really cool off, and the Fed starts talking about cutting rates again, If the jobs market weakens tremendously, which would probably coincide with the Fed talking about cutting rates, these scenarios would change my mind. And I say that because a lot of times people on social media, really strong opinions tend to do well on social media. Like I think we all, like politics, et cetera. The reason those clips go so viral is because they're very opinionated about something. In trading, I think it is actually good to have strong opinions, but to hold on to them loosely in case something changes. So when I look at the dollar right now, I think it's going to go higher. But if it starts to go lower, if something changes that contradicts my viewpoint, then I will, no ego, drop the idea and change my mind, right? So when I look at the dollar, I generally think that the macro still looks good for now. Technicals look bullish overall. COT data, not so hot, right? You have like a 50-50 positioning on the dollar for institutions with a week over week change that was bearish. So that's not super favorable to our dollar bullish thesis. But this is why with Edgefinder, it's not a just one thing. It doesn't just look at macro. It doesn't just look at COT. It doesn't just look at crowd sentiment. It doesn't just look at technicals. It looks at the collective to try and build a summary. So I'm sticking with the dollar longs. I'm also sticking with the gold shorts. I don't know if you guys are keeping an eye on gold this morning, but my goodness, it continues to flood lower. Let's pull that up. In the overnight session, we saw gold making more of a push to the downside. Here's the Fed day stuff, right? Hawkish Fed kind of came out of the shed there, and has pretty much seen nothing but downside since then. You had a little bit of a pop post Fed day, and now it looks like, in my view, gold is likely going to retest these lows. And I have to say, I'm simultaneously liking that. Obviously, I'm short, and so the trade is in profit, but I'm also liking that gold is getting cheaper, because longer term, I'm kind of a permabull when it comes to gold. Like, I like the idea of keeping precious metals in the account. And so when I see gold going down, I welcome it, right? If you really like something for the long term, not necessarily like I'm trying to make money and cash in next week, that's different. That's like trying to, that's like trading more so. From a longer term swing trade, position trade, even an investment kind of, I like gold. Again, not financial advice. You do you, I'm doing me. I'm not telling you what to do with your account ever. But for me, I look at this and I say, okay, I like gold for the long term. I'm short on gold right now because I think the macro has been very favorable to gold shorts. I still think it is. But long term, this just means cheaper prices. I get all sorts of excited. I'm like, this is awesome, because shorting the macro story on gold has made sense for me. I've stayed with that trade. It's been a good one. I shorted silver before this. Like, metals have been really good for shorting setups in the last few weeks. But in the bigger picture, I'm excited because I'm like, okay, hey, we're actually gonna get some precious metals on a discount. I mean, we have not seen gold under the 200-day moving average in multiple years. So I look at this and I'm like, yeah, if you leveraged up and bought gold at the highs, then this is devastating, right? But if you're someone who's not using leverage, someone who's very slow and steady and willing to wait and look for better prices, this is wonderful. Okay? It's sort of a mindset tweak where if you are somebody who's watching gold, let's say because I know there's different types of people who watch this content. Some of you guys are most of you guys are probably very active traders. Some of you guys are active traders, but you also do some longer term holding. Some of you guys are purely long term holding. And I'm curious what you guys actually, maybe can we do a poll on this? Actually, James, do you want to try and help me set up a poll on this? If you go under the widgets tab and make a poll, I'm just curious. like what people say. Are you a trader? Are you an investor? Or are you both? That's what I'm wondering. If we could make a poll on that, that would be awesome. But yeah, I'm curious. So give us a second, guys. We might make a poll about that, and then we can review the results. In the meantime, I'll keep going because I got a lot to talk about today. I know it's a U.S. holiday, but there's so much that took place during this week. I think it's a good time to take a bigger picture look at where we're at. Stocks continue to make me nervous from a investing standpoint. I don't have any interest right now in investing in stocks. I think that they're expensive. I like the trades long. I like index longs. By the way, there's our poll. Very nice. Okay. So if you want to drop a 1, a 2, or a 3 in the chat, let me know. Are you a trader? Are you an investor? Are you both? Oh, do we have any investors here? Anybody like, oh, I don't trade, I only invest? I'd be curious if we have anyone like that. Obviously, this is like a trading channel. I mean, it's Trader Nick. I lean heavily in favor of trading more actively. However, I am certainly both. Like I certainly have longer term things. Like for example, one of my longer term favorite things is cybersecurity. So if I look at like CIBR, this is an ETF that tracks cybersecurity stocks. This is an area of the market that I really like for the long term. I still like it. I mean, I think it's now gotten expensive, and I'm absolutely kicking myself because I missed. This was probably my biggest whoopsie of the year. Was I wanted to buy software companies specifically within the cybersecurity world, and I was looking for one last leg lower that never came, and so that absolutely hurts me to even talk about because cybersecurity was. If you, I mean, you could probably pull up streams where I was talking to Chris Pulver about, I want to buy cybersecurity, I want to buy software at these levels, and I still have my alert. This is like a graveyard alert that I had set in my trading view at where I was going to pick up some cybersecurity stocks. But such is trading, such is markets, right? It is nothing but pain. Trading is pain, man. It is hard. No matter how long you do this too, it's still like you're not going to play anything, like you're very rarely going to play anything perfect. So by that very nature, it's going to be disappointing a lot of times in trading. And what you kind of have to do, you kind of have to say, hey, you know what? I'm going to accept that trading is going to be painful. Like I'm going to miss stuff. I'm going to have something stop me out and then go my direction. I'm going to have stuff that I, was right in the direction, but never got in. I'm going to have losing streaks, like all these things that we talk about so often. It's not that I'm trying to be negative about trading. It's that I'm trying to set a precedent that is, realistic so that people don't, have unrealistic views of markets. Okay. So we have like 50-50 traders and both traders and investors. That's interesting. How many votes do we get on that? How many are we at? Let me just see. We have 22 even. 22 votes for trader, 22 votes for both. Someone break the tie for us. Are you a trader, investor, or both? But anyways, my point with saying all that was because I was talking about gold and I was saying, okay, you know what? I like gold long term. And as a number 3 myself, as a both trader and investor, oh, look at that. We got one person who's an investor. I look at this and I say, trading wise, lovely. Like the shorts have worked out. Investor wise, I'm also like lovely because finally, man, like finally we were talking about, and this is how it goes. Ready for this? This is how it always goes. When the market's going like this, everybody wants a pullback. When the pullback happens, do you know what everyone says? I'm not touching that. And I'm fully aware. I'm fully understanding. I mean, I think that gold is going lower in the short term. Like gold could very well see mid 3000s. Okay. But that is how pullback 101 theory goes. Like when the market's going up like this every single day, people do one of two things. They pray for a pullback, and then when it pulls back, they don't actually buy. Or when the market is going up like this, they chase it and they call it an investment because they don't have any patience. And then when it starts dropping like crazy, they sell it out of fear and say it's broken, it's crashing, it's not working. Right? Like, this is why patience is such an overpowered trait in markets. If you just, especially if you're a little longer term in nature, like if you are willing to chill and relax and not use leverage and not, chase every 30-minute candle or 1-minute candle, right? If you're a little bit slow and steady with it, my personal view is I'm looking at this and I'm saying, look, gold never pulled back for so long, and we finally get it. And now the people who are looking at gold rubbing their hands together are the people who actually liked gold, right? If you're looking at it and you're like, look, I'm getting gold 26% off from the highs and dollar cost averaging and saying, look, if it goes down to 3,800, send it down to 3,600, send it down to 3,500. I don't care. I'm going to add some dollar cost averaging longs to my gold position. That is the mindset that, as an investor side of things, gold moving lower is welcomed. You see what I'm saying? Being an investor, to be clear, investing is hard too. I have shares of Intuit. Let me talk to you guys about a loser, like an absolute loser in my account. Intuit. I've owned Intuit, and I'm down 25% on my shares of Intuit. I thought the stock looked cheap, and it got way cheaper. This stock has been painful, but I still like the company. And I'm also not using any leverage. I'm not borrowing a bunch of margin. I'm not, gambling with the stock, trying to make huge gains really quickly. I'm just holding the stock, and I like the company. And maybe clearly I've been too early, but maybe now I can build a position, still keeping it a reasonably small size in my account. I'm not going to blow up on Intuit shares, but I think that it's a longer term, good company. I could be dead wrong. I'm not going to lose everything on Intuit because I'm buying a small amount. But anyways, my point is, it's a very different mindset than active trading. With active trading, I want this thing to work, or I need to get out of there, because I have a thesis right now, for example, with gold, going back to my gold short trade. This is a trade. I have no long-term loyalty to gold sinking lower and lower and lower. I'm not making the bet that I think gold is going to crash down to 2,000 and, long-term, I'm just a bear. That's not what, it's a very different trade. In fact, I could simultaneously, like a maniac, be buying gold shares, GLD or an ETF or etc. in one account, building it over there, and simultaneously have a short-term short position in my main portfolio. I mean, that's effectively what I'm planning to do. I'm looking to buy some shares of gold GLD and start a dollar cost averaging approach. And I'm thrilled about it because it's like, we've waited so long. You finally get the pullback in gold, 25% off the highs. I still see many concerning issues with U.S. national debt, global national debt. I think inflation is going to be structurally higher for a longer period of time. And while high inflation in the short term causes monetary policy to push gold lower, that's what we're seeing right now, right? Long term, if you have structurally embedded higher inflation, that is actually good for gold in the long term, not in the short term. The short term, if spikes in inflation cause monetary policy to freak out and be bearish for gold, strong for the dollar. But structural, consistent, higher inflation over long stretches of time, gold tends to do decently well, because that can start to hurt growth, hurt jobs, etc., cause people to lose confidence in the government and the Fed. We also know there's like a big theme around global de-dollarization stuff. Like, there's a long-term thesis for gold that I think is different than short-term. Are we making sense? Is this making sense? Can you guys just give me a 1 in the chat if this is making sense? This delineation between long-term and short-term. They are absolutely two different games. Very, very different games. I play both. I think both have pros and cons. Investing can really stink because you can sit in something. Like, here's the thing that stinks about investing. Investing, I could sit in Intuit for another year or 2 years and then realize I was wrong. And 3 years have gone by or whatever. And I realized I was wrong and made no gains on it, right? Trading is much harder than investing, I would argue, but there's upside in the sense that if you know what you're doing, you can do well. But I would say investing is far easier than trading. Trading, you have a lot more upside potential if you are very good. And there's a big if there, because for most people, investing is probably the better route, in my opinion, not financial advice. But yeah, we'll see. Dollar's coming down a little bit here this morning. You still got gold down 1% on the day. Let's see. Nasdaq catching a little bit of a futures bid here. VIX continues to sink lower here. And also, I have to check and see, am I still in? Oh, we got taken out of pound dollar. Very nice. Profits taken on pound dollar. Euro dollar, I think, I don't even know if I'm still in that trade or not. I have to check that on my, I'll do that after the stream. But the dollar longs this week played out really well. Euro dollar, pound dollar, both of those were really clean. I am looking on gold, like I said, to kind of just hold this one, let it run. My plan for gold is I'm looking for a break through these lows. If that happens, then I'll start to really take that stop loss and move it into profit. I would like to see if we got some sort of lower high, something like that, something more obvious. I would consider taking this stop loss and bringing it down, because I am sitting on a pretty good sized gain here, and I do want to lock something in on it. At this point, I have a small risk on the trade, but theoretically, if we can get any kind of move like that, then I'm going to take that stop loss and probably bring it on down here. Nick, I thought if VIX is down, gold should be up. The VIX studies volatility on the S&P 500. The S&P 500 and gold have low correlation to one another. Ceasefire news. Okay. What is the news? Okay, nice. Israel and Hezbollah have agreed to a ceasefire at 4 p.m. U.S. told Iran that Israel won't escalate its Lebanon attacks. Okay. Is oil lower? Not too much. Pretty flat on the day here. Silver also looking pretty heavy here. I also really like the daily chart on gold, like this lower high here. However, again, my thesis, my bearish idea completely gets nullified if this is a higher low and we rip through those highs. From a technical perspective, I'm looking for follow through here in context with this downtrend. And if it doesn't happen, I get out of the trade. Yields, I mean, to the credit of bond bears, you're still sitting here holding up pretty well at this level. All things considered, I mean, this is the concerning thing, right? The war's ending. It seems pretty obvious, like pretty clear. War's ending. Okay. Why are bond yields much lower? I think the answer is because of the Fed, right? The Fed, the dollar moving so sharply higher off of the idea that the Fed is more likely to hike rates next than cut them, at least in the eyes of committee members and the eyes of the bond market. So yes, you have the war ending, but it still seems like the path that the Fed is most prepared for is more hikes than cuts. And we're seeing that across other central banks. Guys, I also have something that I think my team might not be ready for this, but we're going to do this anyways. So we've been working on something that I'm very excited. Nick, I've got a random question. Where are you from? I'm from Atlanta, Georgia. Check me out, okay? I told you guys we've been adding some stuff to the site. We have had the four of us on the team have been working on this the last few days. We're going to do it because it's Friday and I want to do something fun. Okay, you ready? We are introducing at A1 Trading. We have a lot of levers that we can pull. This is fun, okay? At A1 Trading, we have a lot of levers that we can pull with our sponsors. We have a lot of prop firms, a lot of brokers that want to advertise across our platforms. One of the things that we thought would be cool, because we get offered by funds or firms often to do these sorts of things, we are going to be doing weekly prop firm giveaways. Now, we've been doing them on the stream for a while, but this is different because now we're going to be having lots of different sponsors offering funded accounts like what you can see here. And I'm going to drop the link here in the chat. Check this out. If you head over to this website page, a1trading.com/giveaways, there will be every Monday, God willing, that our software does not blow up and break. We've been building, like I said, we've been working on this the last couple of days, the last week or so. Every Monday, we have a countdown going on until a new free giveaway winner will be added or will be announced. It's automated. You cannot cheat, meaning if you try to cheat, it will automatically disqualify your entry. So if you enter multiple emails, like it's wicked smart. Like we've got our developer, he's a beast, and he has like ways to make it so people, so it's a fair entry process. If you put your name in, your email, etc., once per week, a raffle system will automatically give away. So you can see we're giving away a free a free 10K one phase challenge with DNA funded. That will be announced on Monday, and you'll be able to see right here who the winner is on Monday. These sorts of things are so fun. I'm a software engineer, and like this is what I live for within A1 Trading. Like on the business side, I love building systems. That is my addiction. I do it for hours and hours and hours every day because it's so much fun. But this is an automated raffle giveaway system, and we can pull levies with firms because we can ask them, hey, you want to donate some giveaways to our site? And you can come back every single week, enter the giveaway for a chance to win. Throw your name in the hat. Head over to a1trading.com/giveaways. It's not on here yet, but it will be under broker and prop firm offers. We'll have it here on the list. So we're going to add that to the menu. We also offer on the site for free a bunch of free calculators for position sizing, whether you trade CFDs, futures, Forex, prop firm, drawdown calculators. We have all sorts of different tools. The team is completely overhauling our site to make it a free resource to traders. So check it out if you're interested in entering the giveaway. We also offer a bunch of very aggressive discounts using the QR code below my camera. Again, all these prop firms want to spread the word about their firm. And what we do on the team is we're like, okay, if we're going to showcase you, give us the best possible discount for traders that you have in store. And so we hunt for deals for our audience. And it's the idea is that it, helps create better price offers for people who are interested in trading and getting funded. Is it open to Canadians? It is. Yep. Throw your name in the hat. Enter for a chance to win. A1trading.com/giveaways. If you are looking for prop firms, we don't have it yet, but we're going to have prop firms by country soon. We already have brokers by country. Like if you go over here, you can find brokers and special offers available for different countries. But yeah, you can find your country on the list, explore it, etc. It's a free resource to the trader that helps support our show, and that's kind of the win-win. So anyways, guys, up next we have our next show host. It is Mr. James Lane from Elite Traders. He's going to be going through some top setups that he's watching in his own trading. So stay tuned. Don't go anywhere. The show continues with James after this quick break. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello. Happy Friday, ladies and gentlemen. Hope you're all well, and I hope you've all had a fantastic week. So, markets are doing pretty well today. We are seeing some minor pullbacks, but we'll go through the markets in a second. Ray, how are you doing? Hope you're well. Anyone please fund my first account. I'm obsessed with trading but don't have capital. You're obsessed with the wrong thing, my friend. You should be obsessed with getting a job and getting some money and then going and trading. I know that sounds mean, but it's true. You know, I don't think most people that trade have someone that just funds their first account for them, unfortunately. Also, realistically, you're probably going to blow the account. I don't think I know a single trader that has gone from just one account at the start and continue with the same thing. Normally, you will go through the early phase of blowing things. So, excuse me. I think your best bet is using what Nick was just talking about and applying for the free giveaways on the prop firms. And that way you can get a free account, but also your money's not at risk. I think that's probably the safest way to go. Again, I know that sounds horrible, but it's just the truth. Happy Friday, guys. Seeing a lot of you guys popping up, which is nice to see. So euro dollar is running quite well. So the dollar is breaking out really nicely. Oh, sorry, let me rephrase that. Starting to break out quite nicely. We do have today's daily candle showing a little bit of rejection, but we did break higher. So this could be one of two things. Either this is going to completely collapse back down and we're going to stay in this year-long range. I don't think that's the most likely outcome. So if we go down to the H4 timeframe, what I think could happen here is technically we've had the break. This could be a retest. Now, this is very small. You know, this is really not ideal. I would have liked to seen a larger break on a daily time frame and a bit of a nicer pullback. But this could be more of a retest type of idea before we continue higher next week. We also need to understand that we've got is it US holiday today? I think it's the US holiday. I'm not sure exactly what it is, or what exactly the holiday is for, I should say. And after the aggressive moves we've seen this week, we might be seeing sort of, you know, just profit taking. So it's kind of normal to expect some downside today. I'm not too bothered. It's just intraday noise as far as I'm concerned. All of the fundamentals, the ideas, the theses I've got going on are completely intact and still healthy. So we sit through it. Juneteenth, what is that? Is that just another excuse for these Americans to take a holiday? You know, it's funny. The UK has a lot of holidays for school. You know, we spend like half of the year out of school. But then as I've been a trader, I've realized how much time Americans get off. You guys have all, you know, all sorts of stuff. I can't even think about them. You know, the markets are closed for some guy that, excuse me. I know, obviously, you know, respect to the dead and all that, but why do we need a day off the markets for that? I just think it's a bit silly. Anyway, maybe I'm being insensitive. We'll move on. I don't want to get cancelled. James, Nikkei's having a pullback. Is it, Ray Beast? That might be the best news I've had all week. No, it's not. You've lied to me. It's not pulling back at all. Yeah, this isn't enough. So I do really like the idea of buying the Nikkei, but I cannot get in. There's just no pullback. I would really like to see, we spoke about this yesterday actually, but if we draw the fib from the low to the high, a pullback by 50%, so 50% retracement to the fib, would correct this gap perfectly and provide a really nice entry point from there to continue higher. I think that would be sort of the best approach at the moment. I don't really see another way in, to be honest with you, because the trend's just too aggressive. We're not even pulling back to the 50 moving average on the H4, which normally is the case even in aggressive trends. So yeah, just sat out at the minute. So yeah, euro dollar moving quite nicely. We did have a bounce just above this 1.14, which is my sort of TP1. I don't do TP1 and TP2 and things. I like to just get in and get out. But that's sort of my first point of interest. If we really reject heavily here, fine, I might get out and get back in. But realistically, I'm looking for about 1.12 on euro dollar. Excuse me. My apologies. Pound Aussie's running quite well. There's not really much of an update here. Again, it's more of a longer term idea, banking on the deterioration of the UK, and also a pretty nice swap sort of carry trade as well. We get paid decently to just hold short positions on Pound Aussie. Nothing crazy. It's not like Pound Swiss style swaps, but it's still there. And man of the hour, or should I say, let's be a bit more inclusive, let's call it market of the hour, Aussie Swiss. Doing really well. So yeah, cannot complain about this one at all. Oh, you said you're looking for a pullback. My apologies, I must have misread. Market's closed. Yep. SK Wave 9. Hello to you as well. Market's closed, causing some pullbacks until next week. Yes, I think that's a smart idea. James, it's Craigie here. Any thoughts on BOG intervention soon? Hello, Craigie. I do have a little bit of a short position, actually. Nothing heavy. I already took one attempt. I'm willing to take one more attempt. So I was short roughly around here. I had a stop loss roughly here. I managed to close it actually before my stop was hit, which was quite nice. So I took a very small loss on my first short position. And I've scaled in quite a few very small positions here. This isn't the exact entries, by the way. And I've got some pending orders down here as well. So I'm just waiting. If we don't get anything by Monday morning or the market open on Sunday, actually, no, probably Monday morning, London, I'll just cancel the whole thing. But yeah, I would expect something along the lines of today or Sunday. We've got the US holiday. We had very good US dollar developments yesterday. So, well, actually since Wednesday. And now, obviously, dollar yen has rallied above 160, which is kind of uncomfortable now for Japan and the MOF. So I would expect some sort of intervention. Remember what I always tell you. Well, I don't excuse me. I don't want to say always, but typically these interventions happen in low liquidity periods, like US holidays, when we've got less money flowing through the markets, because when the MOF conduct an intervention, the money they put in has more of an impact because there's less money sort of fighting against it, if you will. So it would make a lot of sense for them to do it today. But is that too obvious? I don't know. We'll see. I learned discipline after blowing 3 accounts. Yeah, I think it's the path. It's the way it goes. You don't trade retail until you don't trade retail until you don't find edge or alpha. I think I get what you're saying. You should validate your edge by testing it out of samples and stress testing it in volatility periods. Yeah, I 100% agree, especially for technical strategies. Fundamental ones are a little bit more difficult. I mean, the edge finders actually made it a lot easier. So I used to get asked all the time, how do you backtest as a fundamental trader? And there seems to be a bit of, oh, there we go. The way to do it these days is use the edge finder. So you can see the edge finder score versus the actual price. So these days it's a lot easier. However, it used to be such a pain. You would have to go through, Fred or Trading Economics and scour through the data, find a trade in history, then go and find the setup and do that, rinse and repeat. It would take hours. In fact, no, that's an understatement. It would take months to backtest a strategy if you're a fundamental trader. I don't really know where I was going with that statement, but yeah, I think if you are using the Edge Finder and you want to backtest, I would highly suggest using the Edge Finder score history feature. Hello, did I miss the hold chart? The gold chart, I assume you mean. No, we've not covered gold yet. We can look at gold in a minute, though. In the future, I'm looking to get into SMB Capital. Very nice. Wow, Juneteenth, just like the 4th of July. Okay, I'm not going to read the rest of that. Anyway, have you seen the news regarding the ceasefire, James? What are your thoughts? Yeah, I mean, I don't really care, to be honest. It's not a big deal. So the market moves. The market's very ADHD. Or sorry, should I say traders and investors are ADHD in some aspects. So, you know, we'll get something like Iran or I mean, obviously there's an extent, like COVID was a very big thing, so that's slightly different. But you know, you get Russia, Ukraine, you get Iran in the US. It's a big deal for a little bit, and then something else attractive comes along, and then that's the new focus. The new focus right now is the Fed. So, you know, we had the Fed and the ceasefire, or the signing of the peace deal on the same day. So you would expect the peace deal to have been bearish for the dollar. You know, it's a risk-on event, but takes away the war premium for the dollar. Takes away that risk appetite for the dollar as well. However, we had the Fed. The dollar rallied regardless. So I think regarding currencies, it's not a big deal at all. Focus is 100% on the Fed, as far as I'm concerned anyway. When it comes to things like oil, I think that's also a little bit more of a 50-50. We've obviously got the dollar strengthening. We've got obviously a peace deal as well. So I would say we're slowly headed, well, actually pretty quickly heading back to normal, where the main focus now is going back to just the fundamentals. So normally in trading, you'll find if we really simplify it, there's two main regimes. You've got fundamentally driven markets, and then you've got geopolitical driven markets. So geopolitical, you'll see, you know, primarily oil, gold, Swiss, yen, sort of safe haven assets, risk on and risk off. And that's the narrative. That's what you need to pay attention to. Headlines coming in, so on and so on. And it can be a lot more volatile. Whereas in quote unquote normal conditions, which are normally just fundamentally driven, it's a lot easier because you can look at the edge finder, you say, oh, this is bullish, wait for a pullback, you can buy. It doesn't get any easier than that. But again, the geopolitical driven markets are a lot more tricky, because, you know, you can get chopped up. The amount of times I was in a position and Trump would tweet something about Iran or even tariffs. If you guys remember the tariff situation, that was an absolute nightmare for traders to try and deal with, because, you know, you'd wake up and the Canadian dollar had dumped, or the US dollar had spiked, or actually dumped, or the euro had spiked. It was just it was a horrible mess to try and trade. Anyway, yes, fundamentals run the market. That's the narrative I'm going with right now. Bashi, good to see you. I haven't used you haven't used, okay. We're going back to tariff wars soon, I bet. Maybe, I don't know. I'm not here to speculate on what the next thing is, really. I'm here to, you know, mainly just trade the central banks. As long as I've got a clear read on what the Fed's doing, what the ECB is doing, the Bank of England, so on and so on, I'm happy. You know, that's me. I'm relaxed. Is when those things start going a bit skew-if or a bit wonky, that's when I can get thrown off. It's like with the Iran thing. As soon as that kind of happened, within the first week, I was thrown off a little bit because central banks were pivoting. So, for example, the pound Australian is a really good example of that, actually. So some of you will remember I was short on pound Australian all the way up here, and we closed it somewhere down here. I attempted to get back in on this pullback, but because of the Iran situation, the Bank of England pivoted a bit more hawkish. This market just continued to rally. And that's what I mean. It just kind of ate me a little bit, just temporarily, until I got back to balance with what sort of policy and things we were going to be running with in the short term. What's up, James? How are retails positioning themselves in various pairs on the Edge Finder? We can take a look. Retail sentiment. Let's just isolate. We'll just do currencies for now because, oh wait, hold on. Indices, metals, crypto. I suppose we could leave commodities on. Because if you want to look at indices, I think the better option is the put to call ratio, which we can look at after this if you want. It was a good experience, James. Bad war, of course, but I learned a lot from it in the terms of how banks behaved. Yes. Well, that's the, I don't think the banks really knew what to do either. And that's kind of the beautiful thing about markets. You can often see when there's confusion going on. It's so unclear. Like, again, when you're in fundamentally driven markets, you can see where the markets are going. You know, you can very easily look at the daily or the H4 or even the H1 and say, oh, this market's going down. Again, it's normally simplifying it, but very simple. But when we're in these periods where no one really knows what's going to happen next, you know, you can have a best guess, but no one knows what Trump is going to tweet or what Iran's going to say or who's going to get assassinated next, then the markets just have that very clear indecision. Anyway, we'll move on. So overall, we're actually getting bearish readings: New Zealand CAD, Canadian dollar. Canadian dollar is interesting because retail appear to be majority long, which is a pretty bad currency right now to be holding. So maybe shorts on Canadian dollar, and this is obviously just on retail sentiment. I think shorts Canadian dollar would make sense. What else do we have? They're long on the pound, which is good because I think most of us, you know, us smart traders that are in this stream, I think most of us should be short on the pound. So that's quite reinforcing. I don't really see anything else that's piquing interest. Pound dollar, again, that's quite nice to see. Although pound Australian, oh wait, no, I am short. So that's good. Actually, we're positioned very, very well. Speaking generally, assuming you guys are in sort of the similar biases that I am. That was geopolitical macro linked experience. Alpha. I hope it never happens again. Yeah, well, we'll see what happens. Again, we can only do what we can only take the markets as they are and do our best to build an idea of what's happening next or what will happen next. Much eerie. I've just shown you what the retails are doing, my friend. If you missed it, rewind 30 seconds, you'll see. But yeah, anyway, I don't think there's much on the watch list for me. I would love to get in pound dollar shorts at some point. I just really like the idea of being short pound dollar. The problem I've got with going short pound dollar is I'm already I'm already long on the dollar and I'm already short on the pound. So I'm kind of already technically in a pound dollar short in some aspects, but I would really like to just get short pound dollar and hold that one into the ground at some point. Dollar CAD I also think is a fantastic trade, but again, it's just a very difficult market to get in. There is no pullbacks. So I would expect some pullback to come at some point. Maybe next week we might start seeing the sort of pullbacks that we would expect after the rallies we've seen into the latter part of this week. So maybe a pullback into the 50% retracement, retest these moving averages, and then a bounce and continuation from there would be fine. Even if we continued higher and retested here, I don't think I'd feel comfortable buying into that just because we've already had such a large rally. I feel like that would just be buying a bit too high, kind of buying into a bit of an extension move. What else do we have? Silver, I know we said we'd go over gold, so we'll have a look at that one as well. Yeah, so I was 100% wrong on my call to be a buyer of gold. Luckily, as I said, I didn't take much risk and I was out pretty quickly, so I didn't do much damage. But the annoying part is I was short and then pivoted to being long. So if I just stuck with the short position, I would have been fine. Anyway, I think the sort of the idea really of being short gold hasn't changed. I think, we've got the hawkish Fed, we've got the strong dollar. Overall, I just think the landscape is still bearish for gold. So I would say the next target really would be the previous daily low right here, which would be, let's round it up and just say 4,100, just for the ease of round numbers. And then if we end up breaking below this, because it also lines up with the daily or the previous daily low around here, the next stop would then be around 3,900. So I think there's some really clear take profit levels on gold, and it would maybe be quite a good idea just to trail the stops on gold and just let it run. Because if this market's going to take a turn, there is a long way it could theoretically go. We've had an incredible rally over the past couple of years. There is no reason at the moment where the gold couldn't correct at least half of it. So how should we measure this? Let's go to the weekly time frame, and let's just take this sort of major weekly low, which would be 1,500. If we saw just a 50% correction, that would take us to around 3,600. If we saw a bit of a deeper one towards the 61.8, that would take us to around 3,000. So I think there are definitely opportunities here to be short, and then maybe even pivot long eventually after we start reaching these fib levels on a weekly time frame potentially. You just entered the giveaway. Congratulations. I hope you win. I think 4K for gold buys, but maybe 3,800. I don't know, to be honest. I don't really have a price target. I'm not in a situation right now where I'm looking at gold or silver saying I want to buy at this level, because the landscape's changed. So previously, when I was buying silver during the rally up here, I was quite happy to just wait for pullbacks and buy at key levels. So, I was buying at 60, 65, 70, 75, 80, because it was quite easy. I could just set the pending order above and below and just leave it, because I knew the environment was still conducive for those markets. However, at the moment, that's not the same landscape. So I don't want to sit here with pending orders, every key level and then get triggered into all of them and gold just continues to rally down, because again, I've then bought into a market that doesn't have much support. So I don't mind buying eventually. I would be very happy to buy, but I need the fundamentals to flip first and be a bit more supportive. Gold still bearish in my opinion. Yes, I agree. Gray Fox. So yeah, I mean, gold and silver still getting bearish readings on the edge finder, both -8. So we line that up with the idea that the US dollar is bullish, Nasdaq's bullish, the Dow's bullish, the S&P's bullish, Bitcoin's bullish. We've got a very clear risk on theme with the edge finder right now. Oh, and the FTSE, interesting. So yeah, I don't see really any reason to be a buyer. I think staying on the short side is really the easiest option. In terms of it's kind of the way to go without having to fight the trend, without having to fight the fundamentals, being short, simple. Speaking about Bitcoin, so it's bullish on the edge finder. However, it doesn't seem to be getting any relief. So we did have a very minor pop here with a complete failure to run any higher. So to me, this looks like Bitcoin is ready to completely drop. Excuse me. And one of the main reasons I think that is because we've had quite a few opportunities now for Bitcoin bulls to really step in and create new highs. It's not happened repeatedly. We bottomed here, bottomed again, created a higher low, created highs here, really nothing going on. That was a large weekly range. We then rejected the daily 200 moving average here. Here we could have bounced in again, started pushing higher. We didn't. We created a new lower high and complete failure to break any higher. We're now pushing back down. To me, this just shows that the sellers are just completely in control at the moment. So it might be a case where we don't completely break down, but we mainly break the support, maybe come retest the lows over here around 53,000 and then bounce from there. It could be kind of like a fake out type move. I don't know. I'm not a Bitcoin guy, but yeah, I don't know. It's one of those things because I don't really have much of a bullish case for Bitcoin on my limited knowledge. But I also don't really want to sit here and call for like 40K or 30K because you know how many people have sat calling for Bitcoin to crash and all these types of things, and they're proven wrong time and time and again. So yeah, I'm very flat really. And the thing is, I don't trade it, so I'm allowed to be flat. I can sit here and say I don't know. Technically, we might see a bounce from there. I think you're talking about gold, but yeah, I mean, gold will have those bounces and things. But yeah, I think for short-term traders, either, if you got sort of a mean reversion or a bounce strategy, it could work. If you're a trend follower, staying short is probably the best idea, but prioritizing long positions, I think, is just sort of the hardest way to try and trade it at the moment. So oil is coming down, but I don't really see much of an opportunity. We are currently in a decent little support area. So what I would expect here is a rejection of this level, gap fill, and then a continuation lower from that point. So yeah, basically keeping it really simple. I think that's kind of the base case right now as far as I'm concerned. So bounce off support, come back to resistance, and then continuation. That would just provide a pretty nice break, retest, fill the gap, and then, yeah, again, that continuation lower into at least towards those pre-war prices. Anyway, let me just double check my timing here. So it's currently 14. Okay, so I've got about 5 minutes left, give or take. Also, I've just seen we've got the 1 day change, which is fantastic. Excuse me. I asked Nick to add a change indicator on here so we could see what's new, what's emerging, what's weakening, and that's been added. So credit to Nick and the team. I really like it. So euro dollar is still bearish, pound dollar bearish. I don't think there's much else for us to do. I think really go short pound, short Canadian dollar. Go long US dollar. Again, not financial advice, but I think really, again, the dominant currencies in terms of strength and weakness. Still working on it. Still boogie. It's all good. I appreciate you listening to the input I had. Rumo says, I'm now long NQ 3060. 3633 long entry point, expecting sharp pullback. Okay, let's take a look at Nasdaq. I don't think we've looked at that one yet. To be honest, I was talking to Marco about Nasdaq and the S&P and things yesterday. I don't really know what is still supporting these markets, to be honest with you, other than all I can really think of is like the tech sector, which obviously Nasdaq is tech, but I just think that's kind of the only prop up that these markets have got right now. So we've obviously got the Fed hawkish. We've got the dynamic that investors were using it as an inflation hedge is not really that relevant anymore now that we've got the peace deal signed and Strait of Hormuz is opening back up. So I think really the only thing we can wait for, obviously if you're a bull, this doesn't apply, but if you're waiting for a deeper retracement or you're a bit more bearish, whatever your view may be in terms of downside, I think the real catalyst would be earnings misses by these larger companies like Nvidia, SpaceX, OpenAI, and Anthropic when they eventually IPO. I think that's probably what's going to cause larger downside. But as I always say, bit of a disclaimer, I'm not a stock guy, so I could be very misinformed there, but that's just my view. Gold, we've just covered gold, my friend. To summarize what I said, basically shorts are the easiest way to go. The fundamentals are bearish, the dollar's strong. The trends on gold are all bearish. So, well, when I say all bearish, I mean sort of the H4, H1, so on are bearish. So I would keep it simple and wouldn't try to buy gold right now. Right. So what else do we have going on? So euro dollar, I think we covered. We are seeing a little bit of a continuation lower on euro dollar. It would be interesting to see if we can reach this 1.14. That would be my trigger to then trail my stop. So I haven't moved the stops yet on euro dollar, just because this is one of those situations where I've actually got quite a large target. So 1.12 is my ideal sort of target. And at that point, I would consider closing one of these positions because I've got two open. And then I'd be very happy to just trail stops towards 1.05. That's a very large target. I'm not saying that's going to happen or that's what I'm expecting, but I am prepared for that to happen. So if we look at the monthly time frame on euro dollar here, it is very convincing. So monthly, we create these lower highs continuously. Every time we reject, and we have quite a severe drop. So I'm very happy really to just hold this back in sort of this previous low. Again, I'm not saying it's going to happen, but again, I'm happy to prepare for it. If it happens, fantastic. If not, cool. What's your thoughts on UK PM change coming up and its effect on the pound? It's just going to be a negative, Kyle, for the pound. The UK is in a very tricky spot. The data isn't fantastic. There is a bit of disinflation contemplation going on, I suppose. And we've got the, what do you call it? Yes, the PM change, which is giving real credibility issues, because it's not just the case of, oh, we don't have stable leadership. It's really starting to bring up the question now of, can the UK actually recover? Because if we don't have leadership that can stay in power and do any real change, then it's never going to get fixed. Because I think we're in a bit of a vicious cycle now at the moment in the UK, where we've got such large fundamental core problems. It's not a case of we get a PM and they fix it. It's not that simple anymore, because we've not had that stable leadership to take control of it over a longer period of time. And the more we get the poor leadership and the lack of leadership, it's just going to get worse and worse. So do you see what I'm saying? It's very hard for a PM to come in and actually do anything that is really going to make a difference now. Whether you think they're good or not, I just don't think it's really that possible. Yeah, I really do think the UK is in for a really difficult time over the next couple of years. I just don't see any real saving grace. Pound CAD, 2 very weak currencies. Wouldn't be interested in that. Anyway, ladies and gentlemen, let's just see who's on after me. So Marco is coming on to the show. Guys, have a fantastic weekend. Thank you for being here. Stay safe. Don't get margin called. I'll see you all next week.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1 Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hello everyone. Welcome to my segment. I hope you're doing well. It's Friday. US markets are closed. Stocks are closed. So it's a bit quiet, a bit boring. But I still have some stuff I want to show you. And I'm glad that you are joining us on this more, let's say, quiet Friday. Let me see the viewership. So, okay, 186 people watching the channel, the main channel. That's pretty nice. It's actually higher than usual. So we were talking, or James was talking about the UK. I thought that was pretty interesting and pretty important to cover. They had a meeting. So they had the Fed, no, not the Fed, sorry, the Bank of England, bank rate, summary, and votes. The votes came in a bit more hawkish than expected. So you can see one of them switched from being for a hold to now being for a hike, okay? So essentially with the Bank of England, what is really important is to look at the votes. Look at these specific votes. You can see the vote is reported in an XXX format. The first number is how many MPC members, no, it's MPC. I thought it was like NPC. But MPC members voted to increase the interest rates. Second number is how many voted to decrease. And the third number is how many voted to hold. Okay, so there was one hold, which now flipped to a hike. Personally, I agree with James, and I think that the Bank of England cannot really afford to hike. Okay, the reason for that is if I go to the Edge Finder and we go to the economic data, let's just look at the trend in data. So let's look at the GBP. So the last print was fine, but previous ones were very, very low at 0.1%. Then if we look at the inflation, I don't think inflation is running super hot in the UK. GBP, 2.8%. I would say that's not a massive issue, especially if you compare it to the US, where inflation is raging at 4.2%. So yeah, not really an issue with inflation, but definitely an issue. Let me see. Labor, unemployment. So for the unemployment rate, we have for the UK GBP 4.9%. Let's go to the last 2 years. Definitely an uptrend in the data. So from 4.2% to 4.9%, and the data is definitely pointing higher. I would say that is creating some issues in the UK, and I would say they really cannot afford to hike. Definitely they can't afford to hike as much as the US. That's why I still like GU. That's why I still like selling GU. I did already have 2 positions, so I had one winner and, well, 2 winners basically. So the first one plus 1.46, second one plus 1.66%. I'm looking to take another stab. So I'm looking to get in on another sell position, although at the moment we are now sitting at a support level. So this would really not be the smartest entry area. If you ask me, I would not like to go short at this support level. It's also a round number, so 3.12, right? Yeah, 3.12000. That's definitely a round number. The next round number is 1.31000. But this level, not really the best level to go short. Although if we go up a bit, so if we appreciate a little bit, hit the 20 MA, I think that could give you a better price, a better entry level. So GU definitely on the radar, right? And I think the weakness in the UK will continue. A new trade that I have is a sell on USD JPY, betting on a possible intervention. So took a small stab short. This was a signal in the A1 Discord. So if you want to join the A1 Discord, you can check out the link in the description of the stream, and you can use the code Marco. So you can use the code Marco to get 25% off. Okay, so definitely join us at A1. Got in at 161.418, stop loss 163.209, and basically I'm betting on a possible intervention because we already saw something today on Financial Juice. So suspected JPY intervention, right? And we actually have Israel and Hezbollah have agreed to a ceasefire at 4 p.m. local time on Friday. Senior U.S. official that printed today at 14:50, but I think I think Israel is still attacking Hezbollah, or Hezbollah is still attacking Israel. Okay, let me know if you can hear me. I lost power, so my apartment lost power. It's like I'm living in a third world country, and I'm in I'm in Croatia, basically Europe, but sometimes we do lose power here. So I do apologize. I'm going to try and get things back up and running as soon as I can. If I lose power again, well, then I'm just not going to bother joining back, but hopefully it does not happen. So did we lose viewers? No, actually we didn't lose a lot of viewers. So thank you very much for staying on. Comments. They're cloning Marco. I think his internet dropped or something. Freedom for Marco. Marco is in danger. We see and hear you. Marco is gone. Bring on Frank. I swear Marco always has the technical difficulties. You're all good now, Marco. We're here with you. Frank has never even made an appearance after he left. Marco Metaverse again. I swear Marco is a bot. Okay, well, thank you very much for the comments. And what was I talking about? Yeah, intervention. So as far as the intervention goes, I'm positioned for it. I have some small risk on the table. And so far it's running at break even. Am I afraid of swaps? Yes. So if you check out the Edge Finder, you go to scanners, you go to carry trade scanner, you would know USD, so USD JPY is negative swaps if you're selling. If you're buying, you're getting income, but if you're selling, it is negative swaps. So it's pretty expensive to hold the position. Let me actually see how much I paid for holding it yesterday on my DarwinX account, for example. 2.8, is that true? Yeah, 2.8 euros. That's not bad. So Tiger says in the background that he is present if my power goes out again. Thank you very much. Thank you very much, Tiger, for covering. But I think I'm gonna survive for the next 15 minutes. So if I'm gonna hold this for 7 days to 2 weeks, it's fine. It's fine. What I don't want to do is I don't want to get stuck in the position for a month or 2 months or 3 months. So if there's no intervention in the next 1 to 2 weeks, I'm gonna close this position. There is of course a potential move to the upside that could stop me out. I would look to add in to my short. Okay, so I would look to add into my short position. That's why I went in with small risk. I'm assigning, let's say, full risk of 1% on the whole trade idea, but I may get in 3 times. So 3 positions of 0.3% risk, and then if you stack them all on top of each other, it's 1% risk in total. The next level where I would potentially sell is 163. Above 163, I would say. But do we reach that level? I'm not sure. As I was mentioning, the chatter about an intervention has already been happening. So what I'm betting on and forecasting is a scenario such as this one. Okay? So we get the initial intervention right here. Then we climb up higher. We hit 162 almost. And then we get the massive drop. I'm looking for another drop. I'm not looking for a massive downtrend. I'm looking for a big drop and then to take profit. So could we get this to happen again? Well, we could. History doesn't repeat itself, but it definitely rhymes. So it's not going to be looking exactly like this, but could be pretty similar. The fundamentals are bullish for the dollar still. So that could be the case because the Fed may hike rates this year. That could be the case why USD JPY keeps on going up. But the Middle East conflict does seem to be resolving, which opens up the Strait of Hormuz, or should open up the Strait of Hormuz. I'm not sure if there's any traffic going through the strait. If it does open up, inflation pressure could drop. So it's all a big if. It's all a big if. Looking at the inflation, the CPI in the US, this 4.2% could drop because I do believe most of it was caused by energy. So most of the inflation spike was caused by energy. And the forecast, so the projection that we got from the Fed this week on Wednesday was made before the whole deal and the whole signing and the whole, let's say, de-escalation. So we could maybe get a neutral rate this year. I don't think rate cuts are on the table, but they can just keep the rate the same. So they can just keep the rate at 3.75. I'm interested. What do you guys think? So in the comments, type in hike, neutral, or cut what you believe that the Fed will do by the end of this year. So I know I already did this poll on Wednesday, but now the situation has changed, and you have to know the decision to hike this year in the dot plot that was made before we got this kind of de-escalation around Iran. So put it in the comments. Do you think the Fed cuts, hikes, or stays neutral? Because the situation has definitely changed. Now, do we believe Trump? Do we believe Iran? Is this MOU for real? Apparently, for the next 60 days, they have to come up with a real deal. This is just kind of a deal that is a placeholder for the real thing. So I'm just super confused. I've been watching the situation, listening to Trump. He announced having a deal 37 times already. I thought this time is not going to be any different and the deal will fall through. But so far, the markets seem to be saying, look, this is done. You know, this event is done. The main indicator is the price of Brent. So the price of Brent oil, it's almost back near the level before the war started, right? So we're almost back near that level. So I thought that was pretty interesting. And stocks are raging up. Of course, the stock market is closed for today, S&P and the Nasdaq, but is it actually moving here? It is moving. I don't get it. Why is it moving though? Let me check Hyperliquid. So when the markets are closed, and especially during the weekend, I tend to go to Hyperliquid to get the price, because on Hyperliquid, you get some pretty accurate pricing during the closure of the market. So NAS. Okay. So I thought the stock market was supposed to be closed today. I mean, it is, definitely is. I am actually in Caterpillar and I'm in Global Foundries, but these stocks ain't moving. Just the market, it's not closed. It's closing early in 3 hours. Okay, but individual stocks seem to be closed. Yeah, like this is not moving at all. I don't know. I'm just getting into stocks, so I'm not really an expert. Bashi says hike, cut, neutral. Gosh, I'm delayed. Neutral, you're right. Hike before I even hear the question. Market's not close. It's closing early. I didn't even hear it. I just hit hike. Then I was like, oops, wrong answer for this question. So I'm guessing, yeah, there's no real bias. I know before, so on Wednesday when I did the poll, most of you were hawkish. Most of you were for a rate hike. I was for a rate hike, absolutely. But now the situation has definitely changed. So let me see the Fed Watch tool as well. Let's take a look at that. So Fed Watch tool. Let's take a look. By the end of this year, 9th of December, 26. Okay, this definitely flipped. Last time I saw it, yes, this middle one had the most percentage, but actually I think this one had more percentage than this one, if I remember correctly. I'm not exactly sure. Maybe we can go to rate probability. So you can also look up central bank rate forecasts. If you go to the Fed, yeah, the current one is definitely the highest line. You can see the 1 week ago, you can see 3 weeks ago. Max says, yes, I'm speaking about indices, representation, other market, London exchange is open. Okay, cool. Bashi says, I'm neutral, but keen on hikes. I see for now there's 2 hikes. Cheers lift, Fed rate bets, fully priced 25 basis point hike by September. The next hike could be January 2nd for the second hike, okay. I'm asking the question, do we need to hike if there's an actual resolution? So if this is real, do we need to hike? If this is real, I don't know. Like, you can't be certain during these geopolitical events. You can just focus on the data, as I have been talking about for months now or weeks now. Focus on the data, ignore the headlines, and it has brought me a lot of success in the past few months. I did make some pretty healthy percentage. So let's go back to the main. Okay, I have used the JPY, so I'm playing the intervention. GBPUSD, I'm looking for a rally, and then I will sell any rallies like this. Okay. Nikkei, I'm looking for a pullback. I know I missed the first one, I missed the second one, but it didn't fit the plan. The edge finder was staying neutral, and at that point, I was getting bearish on stocks. We were getting the SpaceX IPO. The retail sentiment was super bullish on stocks. It's still bullish, but now I think we could get more legs to the upside. Okay, I think we could get this. Yes, I know eventually it will crash, absolutely, but I think we can appreciate more before it crashes. I do want to mention the sponsor of today's video. So the sponsor is Ola Prime. And if you're looking to get funded, you can use the code A1 Live. So the code is A1 Live, gets you 25% off any Ola, or sorry, 35% off. 35% off any Ola Prime challenge. Okay. What's cool about Ola Prime is they don't have the consistency rule. And for swing traders, that's very, very important. Depending on the account that you choose, they don't have the consistency rule. And the consistency rule, if you don't know about it, it basically means that every single winning day must be of similar size. So you can't make, let's say you have 5 trading days. You can't make, I don't know, 150 on the first day, lose 100 on the second day, then make, I don't know, let's see, 300, then make 800, and then lose, I don't know, 300. So this is a problem because you have a big outlier on day number 4. That's where the consistency rule can really screw with you. But Ola Prime doesn't have that, so you're free to do whatever your strategy does. For me as a swing trader, I try to squeeze the most out of my reward to risk, so no consistency rule definitely fits me better. The link is in the description, and use the code A1 Live. Let's see, what does Bashi say? If resolution and we see huge drop on prices, maybe not, but this war has been going on for a long time, so it could affect the economy. So better to wait and see how the figures look before making a choice. Absolutely. Yeah, the Fed will definitely wait for figures. They will wait for the inflation print, but the market is going to try and front run. So the market is not going to sit and wait for the Fed. It's not going to sit and wait for the next Fed meeting. The market is always trying to front run the Fed decision because traders are betting on a move that may happen in 1, 2, 3 months. That's why you have websites like this. So currently the markets are pricing in, well, they're pricing in what? 1 rate hike. Still 1 rate hike by the end of this year. You can see the current rate, and you can see the rate at the end of December, 3.94. So that's basically 1 rate hike right there. And 2 hikes for a 12-month outlook. Inflation can back down on its own. Oil already made the damage. Ball out Marco with the coupons. I don't have any free challenges, but I do have a discount code. So oil made the damage. Let's put up oil. It did, yes, it did. But the price is back near the open or near the start of the war. That's a fact. So That's much better than when the price of oil was at 100, right? It's much better for inflation, makes things much, much cheaper. And if the strait is actually open, if it's not mined, again, I'm not closely following the situation because I just think there's too many conflicting sources. But I think the strait could be open, and I think some ships are passing through. That means exchange of oil is happening and supply is increasing, which helps the inflation story. It does. It's a fact. It's a fact. So if you're lost, if you're currently a little bit lost in all of the market narratives and all of the news, I would say my best positions that I have that don't really rely much on what happens with the Middle East is selling GBP USD, or first selling USD JPY because it's a pure play on an intervention. Then selling GU because I think whatever happens, the British pound will lose value, the dollar should gain value against the pound in the next few months. And I think we could break this level of support right here. And then buying stocks, Nikkei and the Nasdaq. I think there's just a lot of interest for stocks, especially artificial intelligence stocks. There could be more legs up. This train does not seem to be stopping just yet. So I do like playing the Nikkei and playing the Nasdaq. It makes sense. It makes total sense in my opinion. Those are kind of the timeless setups that don't rely on headlines that much. They only rely on economic data. What would destroy the GU trade is if the UK actually starts recovering. And for the Nikkei and the Nasdaq, I don't know. For a bearish catalyst, what would be the bearish catalyst? The top in artificial intelligence is here. That would probably be the bearish catalyst, or that the Fed decides to hike rates by 75 basis points in the next, 6 months. But even with that, we have had instances in the past where the Fed was hiking rates and the stock market actually went up. So sometimes the stock market is so strong that it even goes up during hikes, right? Yeah, sure, for sure. Flip a coin on how markets will react. Let's see, what else can we cover? Bitcoin, very bearish no matter what happens. I think we could drop to 50K. Gold and the metals market in general, I don't know. I tried to take a stab at it. Gold doesn't seem to be reacting to anything. It just seems to be going down. I did bet that this was the bottom. It wasn't really the case. Got stopped out. I don't want to re-enter. Gold used to move as a risk-on asset, meaning when stocks went up in the last few months, gold moved up, but now it's just moving with Bitcoin, as you can see. So Bitcoin mostly down, gold mostly down. Silver, same thing. Copper is holding. So copper is holding, platinum down. Best metal right now is copper. I'm not looking to play it. We can run it through the top setups. So let's take a look. Copper, neutral. Yeah, not a great reading. I want to go with the edge finder, absolutely. So I'm now short Nasdaq. Well, the markets will close soon, if I'm not mistaken. So do you really want to open a position into a market close? I don't know. I wouldn't do it. Not financial advice, but right now I wouldn't take anything. It's Friday. US markets are closed. There's very low volatility. You don't know what could happen over the weekend unless you're betting something very bearish happens. I don't see a point in taking a position right now. So I think I covered most of the stuff from the list. We can check out the 2-year yield. It's just going up overall. DXY, JXY. Yen actually broke this level of support and is continuing lower. Interesting. Anyways, that is it from me. Thank you very much for watching. Do not go anywhere because you have Tiger coming on in 30 seconds. I wish you a great weekend. I wish you good luck next week. Definitely join the live stream. I will be streaming every single day except Monday. You know my watch list. You know my favorite stuff. Selling GU. I'm in USD JPY. I want to buy stocks. I think the Nasdaq and the Nikkei look great. Just give me an entry. So that's it. See you, and don't go anywhere. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Hope you're doing well. Happy Friday. Great day by default as always. Obviously a little bit slower of a day with all the markets closed, and just a little bit of thinner liquidity on the currency side. Crypto markets not really getting affected too much, it doesn't appear, but yeah, a little bit of slim pickings today. So as always, let me know if you have any specific tickers you'd like me to check out. Maybe some prep for the Sunday Open here in the States, or Monday morning for you across the pond. We can definitely take a look at some potential setups going into next week for sure. But one thing that I was noticing last night, guys, talking about the dollar yen, is we have reached a level that was last touched. Let me go find dollar yen over here. Last touched in 2024, but it was basically the exact same spot. Talking about this point right here, because we did go through, if you guys noticed, we did go through clear to the top and touched the daily right on the top of the distal line of this daily supply zone. Remember, this is the weekly one right here, and then this is the daily. You guys remember I'd been talking about that 161.25 level, as far as, you know, where I would see would be if they're going to do an intervention, that might be a pretty strong place to do it, because of the fact you got the daily and weekly set of eyeballs on here from 2024. Obviously going back in time to the Wayback Machine a little bit, talking about this zone up here. And again, we have went right to the pipette on top of the daily. So still a little ways to go on the weekly. But if we go to a monthly chart on this thing, if we break that, we're going all the way back to price levels not seen since I was 6 years old. Okay. This is 1986. So we still got just a little bit of work to do to see if we can puncture that. But what a time. What a time. Okay. I was a toddler running around with no shoes on, probably eating cat food or dog food, something like that. That's a hillbilly for you. But yeah, we're this close. We're real close to it. So again, this is the monthly chart, 2024, 1986, a little further back. So yeah, do you think the Bank of Japan wants prices to go that high? I mean, look how high they have historically been in the past. We're talking up in the 320s, even the opening price of 350s. So I don't know that we're going to reach those areas. I don't think they're going to have any interest in that, but it's just interesting to see how close we are to some of those old price levels. on the dollar yen, and I got to admit, guys, I know I told you guys about this Fred website in the past where you can kind of go look at historical interventions. I'm a little annoyed that they don't update things to real time. So I did just a little bit more digging on interventions, and I did find this website here, Ministry of Finance. This is the Japanese Ministry of Finance website. But on here, you can actually go, because this one updates monthly. You can actually go in here and see all the different times they clicked or they intervened in their currency. Obviously, we're looking at the start of the year, zero yen. But then you go into April 28th. All these are zeros down here. But then you go into April 28th, May 27th. You guys know we did have a few little interventions up in there to the tune of 11,739,000,000,000 yen. So that translates out, what's our exchange rate? 160 yen to $1 or so. So it's about $74 billion. So that's about the most accurate, up-to-date site I could find. But hey, it's good to know these numbers. It's pretty cool to be able to go look at the chart and find these spots. So I don't know if there exists anything that updates a little more real time to where we can go back and study it, but that's about the best one I could find. So again, it's the Ministry of Finance Japan site. If you guys have any interest in that, then perhaps you could bookmark this site. Let me see if I don't know if it'll allow me. I'll see if it'll allow me to put it in the chat for you, just so you can have it. Well, let's get this over here. Yeah, that should work. Okay. So yeah, there it is, guys. Again, it's just a data site, a boring old data site. If you guys have the interest to be able to, to want to go back in history within the previous month just to see how much yen was intervened with. So thought that might be a cool resource for you guys. But anyway, the Fed Watch tool, that was something else I was looking. This thing has changed a lot, guys, ever since Kevin Warsh's speech. We're all the way down to a 61% chance this next July meeting of remaining the same. But look how big of a shot we have of raising 25 points, okay? 38%. So this thing's really changed a lot. You go into September, and then now we're on either side of it. So it's basically a coin flip. The last time I looked at this site, when we get down back into the December, I think that was the first one where we may be moving. I mean, you can already see 34%. So there you go. That's the first one where it's like almost 100%. I don't want to say 100%, but very highly likely. But we've been seeing some headlines come in. They may be hiking it up to 2 times. Okay. Well, I think that was just a brand new headline that just came in just shortly ago. Traders lift Fed rate bets, fully priced 25 basis point hike by September. So just a little bit of an outlook on the bonds market and the rates. But yeah, looks like it's not really a done deal anymore that we're going to stay where we're at for a while. We got a lot of percentages hopping up in here. So that's just a little bit of a look at that. And yeah, let me know, guys, if you have any specific tickers, anything you want to plan for the Sunday open. Let me see what we got up here. How many trades were you able to catch this week with all the high impact news? That many. I missed about 4 or 5 different trade opportunities by about 5, 10, 15 pips. A little bit annoying, but that's just mainly because I'm just a little pickier on my zones. I mean, if we go to the pound dollar, which was the main one I was watching, let's take a look. I was keeping an eye up here. So I was watching this 2-hour supply, and I personally like to look for 2 sets of eyeballs on any zone I try to trade, guys. I don't really want to trust just one set, because there's different traders that like different time frames. So when I saw this 2-hour, my first question to myself is, well, where's the second set of eyeballs? So from 2-hour, I just start stepping down. Okay, 1 hour, 2 divided by 4, which is 30 minutes. Okay, so that's kind of the rule of 4 I personally like to follow. And if we go look at that same supply zone and look at a 30-minute chart, that white line represents basically where the 30-minute sets of the 30-minute eyeballs are watching. Okay, as far as supply and demand traders. So that right there was where I had my alert. And at the end of the day, the 2-hour was all it took. Popped in there, and it missed my trade again by just a handful of pips. I had several like this. So I'm crying to myself that I missed out this week. but I didn't break my rules because my rules that I created for myself state 2 sets of eyeballs. Trust but verify. Daily 4 hour, that's a different story. If prices come into a 4 hour, that's usually all the proof I need. Sometimes I'll try and get cute even on that 4 hour and go down to a 1 hour so I can have a third set of eyeballs, depending on where the proximal and distal lines are of the supply zones or demand zones. But because this was a 2 hour time frame I was starting with, I didn't want to trust just 1 2 hour chart because, again, the lower you go, the less, I don't want to say less accurate, but the noisier it gets for any trading style, and supply and demand is no different. Okay. The big banks, the smart money, the pension funds, the institutions, they're typically trading on those higher time frames. They don't tend to get down into the 30-minute, the 15-minute, the 5-minute. Okay. They've got algorithms for that. They do a lot of trading down there. Don't get me wrong, but they have algorithms that do that. As far as their prop traders and people on the desk, they tend to be on the higher time frames. So to me, a 2 hour chart is just a little too small for me to want to utilize and trust just that one time frame. Whereas on a 4 hour, it's a little different. So I didn't have a daily. I didn't have a 4 hour confluence right here. I just had the 2 hours. So I went down to the 30-minute, and that's where it's at. So, but that's fine. I miss a lot of trades like these, but I don't lose any money. I just don't make any money either because I don't want to trust just solely a 2 hour chart. But just goes to show you, and I say this a lot, guys. Usually when I miss a trade, it's because there's something about a zone I just don't quite like or don't quite fully trust. And oftentimes, those are some of the best trades. Sometimes you get into a trade that everything looks absolutely perfect and it just cuts through it like a hot knife through butter. That's trading. Okay. No trading style is 100% perfect. I take losses with the best of them. Okay. Got to admit that up front. Okay. My name is Tiger. I have a problem. Okay. Just joking, but you know what I'm saying. You have to accept the losses. So yeah, I do miss out on a lot of trades, but whenever I do get everything to absolutely line up the way that I like to see it, they work out pretty well. Okay. They're working really good. I basically went from about a 35% win percentage, just a little north of 50% this year, just because of how strict my rules are, and even 60% in a couple of them. So yeah, no, zero, took a goose egg, but I didn't lose anything. Same thing with euro dollar. Okay. If we bump over here, had a daily 4 hour, and I just got through telling you guys 4 hours usually enough because I've already got a daily. Well, I got cute and I was waiting for the 2 hour on here. Okay. And I missed it. So that's another one. That's 2 trades. Now I would have taken both of them. I would have picked one or the other because I don't want to double my risk on any one currency. But the point is, this is another one where the daily 4 hour hit perfect and the bottom just falls out of it. Now, I have to be candid and we have to be realistic and understand that obviously the Kevin Warsh speech after the rate hold, okay, saw a big inflow into the dollar. So that was obviously partially aided by that. I have to be real with that. It wasn't 100% the zones. It was partially the news of the day, the topic du jour. So, but nevertheless, would have worked out perfect. Aussie dollar, that one still hasn't touched. Still got one higher up. New Zealand dollar, this is the third one right here, guys. This one bounced into the daily, but I was waiting for the 4 hour. So again, I didn't break my rules. I didn't lose any money, but I didn't make any money. So pretty well flat. Just missed that one by a few pips as well. Dollar CAD, that's one of the newer entries. I am still keeping an eye on this 1 hour chart, 1 hour frame right here, time frame. A lot of volume. Okay, whenever we had that rate statement and Kevin Warsh's speech, that's 2 expanded range candles with a lot of volume, guys. This is what I like to see. That's why I drew this up for you guys yesterday. I'm waiting for price at some point to come down and just kind of start manipulating itself a little bit. Get that basing structure, liquidity push to the top to sweep, liquidity push to the bottom to sweep. And all I'm asking it to do is just come a little deeper, touch the zone. That would be the entry. This is kind of similar to that spring. Remember, guys, yesterday I was kind of showing you briefly at the end of my stream. I was showing you the 8 different ways of looking at supply and demand zones. That's I guess you could say that's kind of in a way a spring because you start getting priced down, the accumulation starts happening via the liquidity sweeps, and then you usually I don't want to say usually, but oftentimes you'll get that one final drop down or spring before the liftoff. So this was what I was talking about, and the same is true in reverse. Obviously, if all this happens up top above near a supply zone. So yeah, dollar CAD. And then just finishing out the majors over here. Nothing on dollar Swiss. Currently chewing into this daily supply over here. So there's no play on this. I've got a zone down here, but well, even so, this is yet another example where price bounced into the daily. But if I were bullish on this, I would have wanted to buy the 4 hour, which is inside that second set of eyeballs. So even that one, even though it wasn't on my list, still missed by about 16, 18, 20 pips, something like that. So basically all of them. And then dollar yen's kind of on its own. Dollar yen is one where I still have a zone down here. But now that we've bounced into the weekly, daily supply zone confluence, I'm just going to be a little hesitant about this area. I would think a daily supply is going to be a lot stronger than a 4 hour demand. Okay. Remember, the higher the time frame you go, whatever it is, supply or demand, if you drop time frames, they get weaker and weaker as you go down. So I don't want to buy a 4 hour zone knowing that a daily has pushed it down unless it pushes through. And this is why I was kind of let off with this on the outset, because this right here, this is our January 2024 high right here. Again, if we go up 0.1 pip or pipette or anything above this, now we're touching 1986 prices. Okay. But we're not quite there yet. It's going to be very interesting to see if the Bank of Japan jumps in and pushes that down. I don't think they want to revisit 40-year-old prices. Okay. That's just not going to look too good for them. So anyway, if we get the boost up, the push up, just ignore an intervention for a second, then yeah, I'll still probably be interested in this spot down here because pretty good volume bar leaving price on this leg out. So I want to see a break of the top of the weekly, which is the 2024 high. And let's start testing those 1986 price points. And then maybe I would be looking for a buy at that point. And we may touch the 1986 price points and the bottom may just fall out of it. You never know. Okay. But at the end of the day, that's why we just risk small amounts. We're not selling the farm on this. We're just doing a small trade, just something to make a few pips. And I think Nick is even kind of talking about something similar, getting the break and retest. So, yeah. What we got over here? What we got? I found many interesting setups for my personal account. So many for prop with capped consistency rules. Yeah. Yep. Gotta love the consistency rule, right? Yeah. They're, and that's, yeah, I got to say, guys, because I've got a few prop accounts. That's, for me, that's like, I don't like it. I don't like the consistency rule. I understand why they do it, I think, to a point. And this is just all across the board, most all of them do it. And a lot of them are pretty strict, but yeah, they just don't want a YOLO trader. They call it a YOLO trader. Somebody that gets lucky one time, gets a gigantic win, and then they can't win anything else. So they're paying out. The idea is the prop firm doesn't want to pay out somebody that just got lucky one time. They want to see that consistency. So I understand it from that point of view. They're not wanting you to get on there and gamble. They want to see consistency. And the other thing too is, guys, the good side for traders that actually follow and understand it actually makes you a better trader. Okay. It just teaches you how to just look at it as income and not one big lottery win. Get steady with steady, smaller wins, and then your income can start to grow. But you can't, anybody can get lucky and pull the handle and, land on 5 sevens or whatever and pocket $10,000, $20,000. Okay. But it just doesn't translate very well into consistency. So it totally makes sense why they do it. But I'm annoyed with it because, hey, sometimes, even like what Nick says, okay, we like to take trades and just let them run, like his gold trade he had at the start of the year. Okay, that's a great example of it. That's kind of the theory I subscribe to as well, but I don't have a cash account. I've got to follow the challenge account rules. So, hey, we are dealt the hand that we're dealt, and we just got to be better than the situation, right? We just got to look for a way past it. So anyway, you need to accept losses or you will lose more. So just move on and risk manage. Yep, that's true. That's true. And I'm fine with having just 1 or 2 good setups a week. I had the one good one a couple weeks ago that I closed for profit, and I just haven't had them since. So it kind of goes in spurts for me with the way I trade. I may have 2-3 weeks where I've got nothing. I may have a week where I've got 4 or 5 setups. Okay. And then I can't keep track of them all. So, yeah, that's, I've been doing it long enough to understand kind of the formula, kind of the way it works for me personally with my strategy. And I'm fine with it because at the end of the day, I got plenty of other stuff to do rather than sit on a chart all day. All right. Anyway, let's take a look at a few of these other items over here. Oh, yeah, I did want to say the yen has actually pushed up to 100% on the surprise index. The pound got stronger today as well with their retail sales. So let's go take a look at this. Okay, just yet more reasons for some possible intervention. The yen is getting stronger fundamentally. So does the Bank of Japan want to capitalize on that? Possibly. We shall see. Again, I don't think they want to visit 1986. I don't think they want to see that time. I don't know. Who knows? But anyway, Japan CPI was their surprise yesterday to the bullish side. So that gives them 5 bullish reports, 3 neutrals. 0 bearish. So 100% looking pretty good, Japan. Again, UK had their retail sales numbers come out today, which exceeded expectations. So that puts them a little bit higher up. They've only got the 1 bearish item for the consumer price index, even though I'm sure the inhabitants are happy with that. So make their, in the interim, make their goods and services maybe a little cheaper, maybe it's a little bit cheaper gas as well, not to mention oil coming down like crazy. To the pre-war levels, we kind of went in depth with that yesterday, but we can definitely take another look at that if you guys like. U.S. still up there as well, 77%. We did have a bullish retail sales this week, as well as the jobless claims, which came in bearish. Okay, we only had 1. I don't think that's a major deal. It says bearish, not that big a deal, guys. Okay, when you're talking a $220,000 number, you increase 1,000. Yeah, it's bearish. Obviously, you want it to go the other way, but it's not like it's a gigantic deal as far as I'm concerned. So, yeah, dollar's still remaining pretty strong. I need everybody to quit texting and calling me when I am streaming. I got to just start turning my phone off whenever I'm on. Let's see here. UK. So I know UK is currently showing, talking about the FTSE 100, the strongest asset on the list. So I did want to go take a look at that for you guys. It's a little bit choppy when we look at the higher time frames. Go to the daily. I'm going to refresh my chart here. Yeah. What do you guys see? Does this look like it's trying to coil in on itself? Swing high, touch the highs, give or take, something like that. Right down here, same thing. And looks to me like it's trying to curl in on itself. You had the gap up there, the Sunday gap or Monday gap, I guess, above it, and then it just slammed back down inside of it. So we're pretty much coiling up, kind of like what oil was doing for quite a while until it finally broke out to the downside. We're getting a bullish look, so I'm basically kind of looking to ride this trend line. And now there is a daily demand. It's just not the strongest. I'm talking about this daily candle here. Okay, we had a pretty strong candle out. Got a lot of daily volume VSA activities happening from basically the 8th until the 12th. Okay, this past Friday. So that's kind of how this formed, and it pushed up. I'm just a little disappointed it wasn't strong enough to break this structure. But again, it looks to me like it's trying to ride that downtrend a little bit more so. But yeah, we didn't break this. We didn't break this structure. Had we broken this structure, then if we dropped to a 4-hour, then this would probably be my favorite look. Just retracing all the way down to this 4-hour. This is a 4-hour daily confluence. Up a little higher. I've got a smaller time frame confluence, which we're not that far away from. I don't think I like that one as much as this one down here, just because of that basic candle had quite the volume spike. It's closer to the origin of this up move, and it broke some minor structures. But again, I'm just a little disappointed it didn't break the major structure. So yes, I've got an alert down here, but if I were to get into this, if I were to buy into this, I wouldn't try to be greedy at all. Say we drop in, okay. You're getting this demand zone confluences, you're getting the trend line, and I just absolutely wouldn't try to take too many pips, guys, because with the way this thing's coiling in, I don't think I trust it quite yet to just break out to the upside. I don't know. It very well could. You also do have a daily supply ahead, which could act as a take profit. Okay. Ahead of this double top, could potentially form a triple top. So that's kind of the look I'm looking at on UK. It's probably one of my least favorite setups. Again, just because of all the reasons I've kind of already stated there. Bitcoin, gold, silver. Yeah, I wanted to look at Bitcoin, gold, and silver again real quick. Bitcoin obviously giving us that look. So we've dropped into a 15-minute zone, and we've already gotten a little bit of a bounce. Talking about this 15-minute zone from way back here. Again, getting down to those smaller, noisier time frames, right? Range bar charts, yeah, I've messed around with them a little bit, Jameen. I just personally like volume spread analysis and volume profile. Or, I'm sorry, volume footprint. I get the words wrong all the time. Yeah, this is my favorite right here. This is my absolute favorite. Now, this is more advanced stuff, guys. But again, I've mentioned this before. If the volume spread analysis, talking about currency trading, if it's our macro scope, then the volume profile, or volume footprint, there I go again, is our microscope. And I just absolutely love it. Chart template, I need to go FX 10. Yeah, because on volume footprint, it basically lets you know per like micro price level how many transactions took place. And then you can start looking for stacked imbalances like this one down here. Okay, 78 is obviously more than 3 times larger than 1. 40 is obviously more than 3 times larger than 5. So it just kind of gives you an idea on a micro price level who's winning strong. This is similar, guys, for anybody that uses level 2 data, okay, for stock trading. This is a very similar tool, but it shows you the deltas, if it's positive delta overall. If I'm buying in a demand, I want to see a positive delta number. I want to see 2, 3, 4 stacked imbalances in a row. They're denoted by these little bars to the side. Just like up here, right close to the value area high, you got 43, okay, which is more than 3 times larger than 6. 33, which is more than 3 times larger than 8. So it's always whatever the number is over here, you got to go up and to the right, just like a bid and ask spread. Okay. But this way you can get it on that microscopic level to see where that potential institutional volume is starting to really kick in. Okay. As far as accumulating their positions. Remember, banks, institutions can't typically put in a one large order like you and I can, because they're dealing with $1 million orders. Okay. So they can't just pull the trigger. Otherwise they'll get a horrible fill. They'll get terrible slippage. If they're buying down here, they may get some of the order transact here, rather than down here. So they have to put in a lot of orders of much smaller amounts. So that's what the volume profile or volume footprint and the volume spread analysis say on a micro and macro level, microscopic and macroscopic, if that makes sense. So anyway, that's a little more advanced stuff. I don't like spending too much time on here talking about it just because it might blow some of you out. But anyway, so I've went over the majors. Gold, silver, that's right. I wanted to finish with gold and silver again, so, since we're obviously getting some pretty good continuation bearish scores over here. And yeah, like James said, it's pretty cool that they got this number over here showing the 1 day changes, +3. Okay, so in other words, +2 to +3. I'm assuming that's what that means. I need to actually talk to him about that, make sure I'm even reading it right. But anyway, let's go to gold, silver, kind of ended on that. I know that's one of the favorites with you guys. And if I just go back to my 2 chart, look over here, daily, 4 hour on the left. Got that, obviously that drop. Definitely going to be interested to see if we could shoot through this 4 hour demand down here. Yeah, this is another one I missed by some pips, guys. I told you guys I wasn't too interested in this zone because of the equilibrium to the left. This one up here looked a little bit better to me, but there you go. It did shoot through the zone, this bottom zone, and just missed. So yeah, hey, at the end of the day, you win some, you lose some, and sometimes you just miss out. This was just the week where I missed out. But I'm sticking with that zone up here, unless we can break this demand. If we break this demand, then I'll reevaluate it. Okay, let's say we break this demand right here. Okay, break demand, close, and then I'll just be looking for a brand newly created supply zone. Somewhere up in this area, wherever it forms. But wherever it forms, it has to have a big, strong red candle. So give me a base, kind of like what we talked about yesterday. As a supply demand zone is not a zone until you get that strong leg out. So who knows? Could it be creating itself now? Never know. But I have to have a big red candle and close, and then I would be interested. So it's kind of like, honestly, pound dollar and yeah, pound dollar is a good example. So normally I would wait for these higher up zones, but now that we've broken, and I know I'm just about out of time, James, I'll be done in a second. Now that we've broken this demand zone right here and closed, well, that shifts everything down for me. So that's why I actually moved my interest from up here to right here. You had a big range kind of pushing and resetting price. You base, you get a big drop and close, and now I want to be interested in this zone. So I've actually moved everything down to this 133 level. Okay, different levels. Prices tend to hang out in one area, one little range for a while, and something shifts and they move to another area, whether it's up or whether it's down, like in this case. So everything shifted down. That brings my eyeballs now to this lower zone because we broke this demand zone and closed. Okay. So that's, I think about it. I already went through gold, silver. Yeah. I've been telling you guys, look at that silver. So what are we up to now? Six assets I missed by this much, missed my entry. Okay. I'm picky. I admit it. Okay. I admit it. But again, I'm fine with that. I'm fine with that. 7 good entries this week, and I missed them by like 5 pips. Come on, man. It's okay. Try and do better the next time. Ladies and gents, it's going to be a thin day, so trade safe out there, and we'll be back next week for more fun. Take care.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.